So hello, everybody, and welcome to our webinar today. For those of you who don't know me, my name is Tracy Powell. I'm president of Ignite Technology and Innovation. We're a not-for-profit that focuses on creating technology and intentional spaces in under-resourced communities. We also provide workshops, classes around technology for youth and adults, and also entrepreneurship programs. Create programs that help accelerate companies and businesses at the early stage. And well, today what we're doing is we're doing part two of a webinar we had a couple weeks ago called Your Health, Your Hustle. Part two, Protect Yourself and Your Business. And part one, for those of you who didn't get to see it, you can still tune in. We videoed that one, and so that one's on demand on our website and through other links that we have. And that one dealt mostly around individuals and health insurance. It's our theory that part of being a successful entrepreneur is being able to protect yourself and your family. So we're very diligent around the partnerships and collaborations we do to help you bridge that kind of obstacle that may be keeping you from becoming an entrepreneur, or could be, just really tough making that decision going from a company or corporation or job, giving up benefits to nothing. And so we don't believe you should have to do that. And so what we do is just try to educate not only our members, but other folks on what you could be doing. So this is part two, Protect Yourself and Your Business. We talked a lot the first time about individuals, but today we'll specifically talk more about how businesses can help, small businesses can activate insurance and different other protection plans to help you while you go through life trying to create your mission and vision around business and business development. Of course, today our presenter will be the presenter we had in part one, Deborah Pearson. And Deborah is head of 2020 Health Benefits Solution, which is one of our collaborative partners that we went into partnership with at Ignite to help provide our members with health insurance and to be able to provide business insurance as well to some of our members. Deborah's has over 30 years of successful sales leadership roles in the insurance and financial industry. She's owned a brokerage firm specializing in investments and employee benefits. She's managed regional and national initiatives for major insurance providers and has uniquely positioned herself to provide strategies, solutions necessary for employers and employees at diversified work sites across the country. So just with that, guys, we just really look for quality companies, people that have been in this space for years and that can answer just about any question you have about it. So that's going to be our agenda for today. And Deborah's going to give us all the ABCs on what we need to do to protect our business. At the end of this presentation, you'll have an opportunity to ask questions. Anya, who is one of our community managers in Blue Lacuna, is on as well. Just make sure you put your questions down and let her know what they are in the Q&A, and we'll make sure we get to them before the end of the webinar. And without me delaying this, obviously this is hosted by Ignite Technology Innovation, 2020 Benefit Solutions, and of course our co-working space here at Pilsen, Blue Lacuna. And it's on Deborah now. Hi, Deborah. How you doing?
Well, hello, and thank you, Tracy, for allowing me to come and share information and strategies with the members of Ignite and your team. This is such an important arena, and it's really a fundamental building block for anyone that's starting their own endeavor, and that includes solopreneurs, entrepreneurs, small business owners, and I think that's where our focus is going to be today after our presentation last time, where we really focused on what are the buzzwords, what types of coverages are available for the individuals, what kinds of plan designs can you have? When we speak about plans and plan designs, there are distinct differences between what can be purchased on an individual basis and what you can do under the auspices of a business. And that business can be, um, however your business is set up, there are unique opportunities that lie within that company structure. Today, we're talking about strategies for groups that have up to 50 people. And I do want to take a special note because it plays back to our first presentation where we were talking about what some of the options are, and just remind everyone, if they're not aware of it, that President Biden has extended the open enrollment for the marketplace plans. And if anyone is interested in that, it is available from February 15th to May 15th of this year. So that's a nice bonus for someone who may have missed that opportunity last year when it closed in December.
Great.
So we'll move on to the next slide. There are three main avenues that you can travel when you are looking to explore crafting a plan for your organization. And it truly is a consultative process. This is a 30,000-foot view on what could be available for you and how you can use it to your advantage and the advantage of your employees. The first one is, I think, the most common. It's the one that people are familiar with. It's a group insurance plan. Many of us have worked for employers and participated in group plans. You can offer a group plan as long as we have at least two people. We can form a group. It is how they define a group that we need to focus on. So if you've got, yourself and someone else, we can look into that avenue for you. And as we discussed in the previous presentation, there is a myriad of options and price points for you. So it can meet just about any goal that you have from a financial perspective. And an advantage of a group plan is that as the number of employees increases, as your business grows, so too can the plans. They can just grow with you. The next um, uh, option that you have as a small employer, because face it, as business owners, it's challenging to keep up with all of what's going on with the rules and the regulations and the price points, especially as it relates to healthcare. There is an option that's called an informal stipend. And what this is that instead of actually buying an insurance program, you can set up a program where you give your employees, even if it's just you can give yourself this, you're formally structuring it. And the money that you set aside is intended for your employees to be able to spend it on healthcare expenses. The money is taxable to you and it's taxable to your employee. Um, you don't really have any way of mandating how the money is used. You can put it as a stipend and a wage increase with the intention of them spending it towards healthcare, but that doesn't mean that they necessarily will spend it on healthcare. Most employees don't consider this type of a wage increase a health benefit because they're getting the money in their hand and it's not associated with a specific plan. So there are definitely pluses and minuses to all of the points that we're going to go over, and that we would delve into when we're really doing a consultative process about you and what your goals are. But a overwhelming majority of job seekers take a job because of better benefits. So if you're looking to attract employees, you're looking to retain them, this may not be the way to go. If it's you and, your brother-in-law, and you're working at the company and it's smaller and it's contained and you know what those expenses are for, this might be a very good workable solution for you. And that's why I included it here. You don't normally see this in presentations about insurance programs, because it isn't insurance. It is a financial stipend that you're giving for the reason of funding health expenses. So in a very controlled environment, which a solopreneur or an entrepreneur would be in,
Mhm.
this could be extremely beneficial. So we'll move on to the next slide, which is number 3. And this is something that you may have heard of, but there's so many acronyms in the business. We already know that the costs of healthcare are many, that we can have a number of different plan designs. The informal stipends might not work for employers that have a few more or really want to grow. But then what are your other options? Your other option is number 3. And option number 3 is what they call an HRA. An HRA, health reimbursement account, and it gives employees a monthly amount very similar to the stipend. Remember, the stipend, you gave them an amount for healthcare, but this is a more formal plan design, because you are giving them a monthly tax-free. Now we're talking, there's added tax benefits in this, for them to use on their health expenses. And they can buy their health care. It can include insurance premiums. It can include medications. Anything that's healthcare related can be funded with this. And the business is completely in control of the budget, which is another huge advantage, because finances are limited when you're first starting a business in most cases. And you don't want to have a plan that you're going to experience many increases or unknown variables when it comes to the finances. That's a beauty of an HRA account, is that you can set aside, and I'll say as an example, $100 per employee. So you know that if you've got 3 employees, you're spending $300 a month in the HRA, and then you put that aside every month, and then as the employees need it, they can take it out to help fund the expense. Now, in an HRA, now that I've spoken about a sample dollar amount, you are limited on an annual basis what you can put into an HRA, and that's $1,800. But it does allow you budgetary controls. The next slide will show us some additional advantages, because it talks about savings with your HRA. There's a lot of different eligible expenses. I went into a few of them, like medications, some of your over-the-counter items. It's really like extra money in your pocket every year, or extra money in the pockets of your employees, to be able to spend on this. And there are additional tax advantages for the employer. This is really good for, again, for solopreneurs and entrepreneurs, which is truly the main audience. Uh, and it can be a standalone plan. It's a very, very good fit. If you plan on bringing additional employees on board, there is a different type, a hybrid of an HRA that's available to you, and that's up to 49 employees, which is why we kind of drew the line in the sand with the presentation today for employers up to 50, so that everything we're talking about here today can relate to that employee base.
Right.
And to get the tax advantages from this plan, you would set the plan up, and then you would talk to your accountant. I speak about the tax advantages, and I know them from a high level. I am not an accountant. And based on how you set your company or your corporation or your LLC, how you structure that is going to determine how best some of these apply to you, and that's what we talk about when we meet individually. If we can move on to the next slide, we're going to talk about participating in an HRA because you, as the employer, determine who gets to participate, to what amount do they get to participate in, and you sign up for the HRA. The employer establishes it. They establish the plan, and they select the open enrollment in period as the period where the employees can um, sign up for the plan and participate in the plan. I have human resources department in here, but sometimes that would be the business owner. If you've got, one employee or two employees, you're doing all of these steps. But typically, in an organization that might have 25 or 30, you're going to be dealing with a office manager or an HR manager to be able to do that, to determine who participates in the HRA and what the processes are. The employer contributes to an HRA, and unlike other healthcare benefit accounts, such as healthcare flexible spending accounts or health savings accounts, you don't make contributions to the HRA as an employee. When you're wearing the employee hat, you don't put money into the HRA. Only the employer does. So as the employer, you determine how much you want to put in per year for these expenses, and it's 100% funded by you, it's 100% controlled by you, and you determine who's eligible, how they'll receive it, and when they'll receive it. So we talked about setting it up. We talked about putting the money in and establishing that. Now, how do the employees take the money out? How are they reimbursed from this HRA? How do they make it work? Most plans that are eligible for these have the full balance available to them. If your HRA is based on accrual, that means that they will only have access to the amount that's currently in there. So in February, keeping with our example of $100 a month, in February, they would have access to $200 underneath an accrual plan. Underneath a regular plan, they could get the full $1,200, the $100 a month for 12 months. They would get the whole $1,200 at their disposal as of February. So that's another key component on how they can gain distribution from the account. There are many resources available for you to set up an HRA, and I do want to make a note that you can establish an HRA and an HSA, a health savings account, at the same time, so that you can be reimbursed and have a tax advantage for your reimbursable medical expenses, as well as save on high deductible plans, because HSAs are a very similar plan, but it is for the deductibles and the coinsurance and the things that you're responsible for before your health insurance starts picking things up at 100%. And you are also eligible for a flexible spending account, which allows you to pre-tax the premiums. So there are a number of advantages and ways that you can cut and control the costs that you spend on benefits, not only for yourself, but for every employee that you have with you. Do we have any questions?
Well, Anya, if you see some questions there, I have a few that I want to ask
Okay.
Deborah. I'm just going to put my camera back on. So one of the things, and I never heard of the HRA. I think this is the first time I've heard about the HRA, but it seems very flexible and something that a lot of our small businesses could use. I mean, my first question is like, how complicated is it to like form one of these?
It isn't complicated at all. It's a set a series of forms that you establish a plan and you establish the parameters of that plan, and then it goes into effect and you start putting the money aside. And that is typical with all of the programs. And remember that we have, as an Ignite benefit, the opportunity for employers to get a Section 125 program at no charge, which is a pre-taxation of premiums.
Okay,
So that is available as a member benefit.
right. Yeah. So then also another follow-up question on that. Would we have to maintain these funds that we hold for the employees? And I'm talking from an employer standpoint, because I'm assuming a lot of folks that are on here are either small businesses or entrepreneurs that want to, add benefits to what they can offer employees. Will we have to set up a separate account for that just to hold the dollars in? And then the follow-up question to that question is, if a employee doesn't use that money, what happens? Does it just flow over to the next year, or how does that work?
Okay. I always suggest, as do my partners that are accountants, to have a clear delineation in any funds that you're holding and controlling for any group, and a full separate accounting sheet for those funds. And very simple to do if you've only got yourself or one other person. But I would still make that amount separate so it can be very clear and defined. um, with an HRA, there are uh, certain uh, ways that you can fund it. Again, you need to get with the with an accountant or a financial specialist to help with that. Um, but it's really easy. It's a really simple process, and I would keep them separate so that you can have a clear accounting at the end of the year, what's going where. And then I think the second part of your question was what happens to any monies that are in there after uh, the end of the year. Then those monies can roll over.
Gotcha. Okay. Well, this is great. And so, just for everyone to know, obviously, I don't have all the answers. Deborah has pretty much most of the answers. So, if you are interested in this, you see the contact information here. Please take any of these numbers down. Become a member of Ignite under either our co-working spaces, Blue Lacuna or Momentum. A lot of free benefits for insurance for yourselves, but also she will be able to kind of handle any kind of questions around this. It seems like a great option, and at least not as expensive as some other options would be for small businesses. And the other thing I wanted to say before we open it up for general questions is that it's very competitive now in hiring, and so being able to offer some form of incentive around insurance and benefits really helps you get a better employee or a better team, build a stronger team. And so definitely think about these types of things as we move forward in developing our businesses. I think we might have, let's see, what's a closing slide? I think that's it. Okay, yep, thank you. Any questions? There's Deborah's contact information. Uh, you guys feel free to take that down. We'll also put it in the box down there where you can see the information as well. We're going to have Anya. Anya can jump in there, and I'll open the screen back up and she can answer some questions that are sitting in the Q&A. Okay, thank you guys.
We have a question. The first one is, hi, I have a question about group insurance. Some of my family works with me in my business. Can they count as part of my group if I am setting one up?
You can have them as individual members, depending on what the affiliation is. To say that they're family, if it's your spouse, to get two individual plans, you're going to wind up paying more than if you had a family plan. If you've got, like, your cousin Sally and your sister Sammy there, then they're not part of your uh, immediate family uh, in your own home, and they would be treated, even though they were family, individually for their own employee count purposes. And we see a lot of that.
The next question is, I have small business. If I start a group health plan, do I have to offer it to everyone? I have 2 part-times and 2 full-time employees.
Great question. Just as we spoke about setting up the plan design with the HRAs and HSAs that we just spoke about, you do the same with your health insurance plan. The employer defines what the participation and the eligibility rates are. And when we talk about eligibility, we're talking about who's able to participate. How many hours do they have to work in order to be considered qualified to participate in the plan? Now, it does have to apply, equitably along all employment lines. So, if you say that you work 20 hours a week, then everybody that works 20 hours a week would have to follow that same guideline. But the employer determines that. So no, you do not have to include part-timers in your or casual employees or 1099 employees. There are other benefits that you can offer them that they can pay for on their own that you don't have to contribute towards, because with most group plans you have to contribute a percentage, and that percentage is minimally 50% on your standardized plans.
Got it. Okay. The next question is, you mentioned different types of benefits. What if my company starts but then can't afford them going forward?
Um, well, this too is part of the consultation process, because looking at what the budget is and what the projected income is for your business and what you're comfortable with spending, and that's one of the first topics before I ever start talking about plans, is, what is your vision? What is your budget? Because we can, almost reverse engineer plans to fit within the constraints of your budget. And there are many different types of benefits. I alluded to it just a moment ago. Yes, there are benefits where you have to contribute, and you do want to make a commitment that's going to be at least a year moving forward. If I'm going to give you a time horizon, about a year before you start, maybe changing the plan designs or changing how you're doing things. And that can go up and down. Maybe you are an organization that relies on grants, and maybe some of those grants dried up. So then we have to reassess and go back in at renewal time to see what we could offer you that best fits your budget and your needs at that time. It's always better to give than to take away from, if you've got employees. I mean, if it's just you or you and your wife in the business, then that conversation is going to look a lot different than if you've got 10 employees, because we don't want them to have any kind of a distaste in their mouth at the end of a year when you've given them this great benefit for 12 months, and then you're going to have to take a step back. So we do that as part of that process, and it might mean that you take one benefit where you are contributing to the cost of the plan, and then we look into other benefits that can be offered on an individual choice basis, where the employee has an opportunity to select the benefit and pay for that benefit on their own, but maybe utilize your tax um, situation in your tax filing so that we can offer them some tax advantages. Like I did mention a Section 125 plan, and that's just using and utilizing the Section 125 of the Internal Revenue Code, which allows us to take premium payments pre versus post tax. That will save your employees, depending on their tax bracket, of course, about 15 to 20% on their premium. So they can pick a plan that's, $50, but by the time it comes out of their check, it's going to feel like $40. So that's a huge advantage. So you're giving them a benefit because now they can get benefits they might not normally have been able to get. Plus, you're giving them a tax advantage on top of that benefit. I mean, we can craft a really good story for people on a budget on what they can do and what they can offer their employees.
Thank you. The next question is, if my company offers benefits to my employees, can I require my employees to pay for part or most of it? Can you help me understand that?
Yes. Um, with group health insurance programs, there are requirements based on the fact that it is a group insurance plan. One of those is the size of the group. One of those is how much the employer is going to pay. So the employer could pay 100%. Those plans have really gone by way of the dinosaur. But if there's only like two people and it's you and your wife or you and your mom working the business, then maybe 100% is where you want to be. But you have to contribute at least 50% of the health premium. You can contribute up to 100% on any other program, but we can go down on those plans to where we can offer them where the employee would pay 100%. If you want vision, you'd pay 100%. If you want dental, you'd pay 100%. If you want disability or life insurance or hospital programs, I mean, we've got so many different plans that fit different needs, and we would put that together with whatever health insurance program you selected. So if you chose a really high deductible, we might start talking about getting that HSA, that health savings account, so that people can start funding for that deductible and get that deductible tax free or pre-tax. And then in addition to that, they can put their other benefits under there. We might talk about a hospitalization plan. If you're taking a $10,000 deductible on your health plan, that's a big hit for someone to take if they have to use those services. So we might put a very inexpensive hospital plan in there so that you're really going to get your large expenses when you're hospitalized and you have surgeries. So that will maybe pay out 5,000, and then they don't have to come up with the money out of their pocket. One plan meets where the gap in the other plan is, and we call those gap plans. So we design whatever you need. We would design it. You can design it according to your needs and your budget.
Okay. The next question is, can you fund other benefits this way or just health benefits?
You can fund any benefit that you would like to any percentage. The only real key with a certain percentage would be health insurance and then retirement accounts, but we're not getting into the retirement account arena right now. But for the benefits we've discussed here, any amount that you'd like, you can fund.
Okay. Another question reads, I wanted to better understand where to start with the HRA or HSA. Would I set up with you but also need to consult in tax professional as well?
Yes, you would need to consult with someone. My information's there. I'll be happy to speak with you about it. And then based on how your business is set up and what your goals are, a very simple HRA is very simple. It's like setting up a bank account or something. I mean, you don't need a ton of advice for setting it up from a financial perspective. What you need is advice from a financial perspective on how you're going to handle that as far as any tax implications that could affect your business and your business structure.
Okay. The next question reads, so did you say you can have an HSA and you don't have to offer a health benefit and the employees can use towards health if they want to?
Yes, the HSA, you have to have a health benefit. You have to have a high deductible plan. That is what HSAs, health savings accounts, were designed for. You can have an HRA, a healthcare reimbursement account, and not offer health insurance because you're offering the HRA as a benefit to fund health expenses, and that health expense could be your insurance premium or an insurance premium. Was that clear to whoever asked the question?
I hope so. I hope they're
Okay, because to summarize it, with an HRA, you do not have to have insurance, so you do not have to fund anything. With an HSA, you need to have a high deductible plan, and it's a tax advantage that was given to people that can't, can only afford plans that have huge out-of-pocket exposure, so they're getting an additional tax break. So you have to have coverage to do the HSA. You don't for the HRA.
got it. And they just responded and they said, yes, it worked out. And that was actually our last question.
Well,
Thanks.
great.
Good questions.
I know, right? We always have great questions, don't we?
Somebody actually just sent in a question.
Oh, they did.
It says, I saw something about self-funded insurance. What is that?
Okay. We didn't talk about it here, but self-funded insurance is where you would take the responsibility financially of what an insurance company normally does up to certain levels of risk. This is not something I would normally suggest to a small employer, because if you're in business for yourself and you don't get insurance, you've just self-insured, because that's what self-insurance is you're taking on that risk. There are formal insurance programs that can be designed with a self-insured component. But typically those are for larger organizations. I work with the fire department, and I've worked with Cook County, and they have some self-insured components. But once the loss gets to be to a certain extent, they have insurance to cover that, because you have to know what your risk tolerance level is. You might be able to afford $1,000. So on a small business level, you're self-insuring by the amount of the deductible that you pick. So if you want to save money on your health insurance premiums, I would suggest getting a higher deductible, $5,000, $10,000. You're self-insuring that first $5,000 or $10,000 because you're saying, I'm going to pay for that. If something happens, I'll pay for the first $5,000, $10,000. Then the insurance company will pay for it. So that's a simplified self-insurance component for a small employer, entrepreneur, solopreneur.
All right. Is that it? The questions, Anya, for today?
Yes, that was the last question.
All right, good. We did pretty good time. And so, thank you, Deborah. Again, as always, you give us some really good information about insurance and health insurance, and just kind of taking a question mark, a hope out of a lot of folks' brains, and maybe even enough questions marks so that we understand the importance of health insurance and protecting ourselves and our families. It just makes business a lot more predictable and keeps us engaged in it long enough to be successful. So thank you again, Deborah, for bringing all this information. And folks, or you can contact Deborah directly and get as much information as you want, as she's willing to give you. But also remember, with membership with any of our co-working spaces, there's a lot of discounts that come along with that, as well as some free products as well. So explore membership with Blue Lacuna or Momentum Coffee and Co-working, and then take advantage of some of the things that Deborah has brought to us today. So I would like to thank everybody that tuned in today. This will be recorded, and you can always go back and see a recording of this if you have some more questions, or you don't want to call us, but you just want to go back and look at it again. Feel free to do that. We'll make it available on our website and through social media, and I think even on our Zoom channel, you can do that. Thank you, and thanks again. Thank you, Anya. And until next time, we'll talk to you guys. Thank you.
Thank you. Thank you.